And then while you're getting set up, I'll just say hello, everyone, again, and welcome. Thank you for joining us. Without further ado, it's my pleasure to introduce to you David Morgan. He's a widely recognized analyst in the precious metals industry. He's also the publisher of the Morgan Report, a world-class publication designed to build and secure wealth. All right, David, I'll go ahead and let you get started now.
All right, you've seen my screen. That's the disclaimer. Silver, an asymmetric trade. An asymmetric trade is when the downside is limited, but the upside is unlimited. This shows you what silver actually did in real dollar terms. So I've taken the inflation lie out of this. So $1 in 1344 is the same dollar of 1924. So now we can see what's really going on. When silver was used as money, you can see for, 900 years, we had, around $300 to $400, dropped down to around 200 for another 500, 700, 800 years, dropped down into the 90, 80, 90 range. And it's only when we went off of silver as money in the early 1900s where you saw it treated as a commodity, and you got down to, the 16-to-1 monetary ratio until, we abandoned it. Shot up briefly during the hunts, and then it inflation adjusted was the lowest price when I started basically the silver investor. On an inflation adjusted price, it was the lowest it ever been from the 1300s. That's when Warren Buffett bought. So it's the only commodity in the metals complex that hasn't got a higher price than its 1980 high. You can see we've already had a great run from the financial crisis of 2008 up until the end of April 2011. I expect a performance that will be better than this. The third leg up in the Elliott wave is the longest in price, or the greatest in price movement, and usually the shortest in duration. So if you go from the financial crisis bottom, we'll call it, according to this, 2009, 2 years and 1 quarter later, it was up over 400%. This time, it won't repeat exactly, but it could be from the bottom, which maybe was 1850 last year. And I would expect something like an 8-fold. So if I round 18 up to 20 and multiply by 8, that'd be 160. I'm not too hung up on the dollar price. What I am hung up on is what's the value. Every time since the 1970s that we've had a run in the metals, which are always spikes, as you can see, silver outperformed gold, silver outperformed gold, and silver did not outperform gold in the 2020 run after the illness. That really upset Tigre, Lobo Tigre, which you may or not know what I'm even talking about, but he made a big point about that. I don't know. I think the school is still out on it. Silver demand, over half is industrial demand. Jewelry and silverware is low. It has been for decades. Photography, of course, is nothing. It used to be a big slice of the pie. The physical investment is certainly gaining traction during times of financial uncertainty. The debt problem, we all know, is going parabolic. It's going straight up. About 20-25% of all of the debt in the system has occurred in the last couple of years. Whenever you go exponential on anything, the silver price, the money supply, oil price, crop failure, whatever, you must pay attention. So we're tapering off, we're raising interest rates. All it's done is this little bitty down thing right here. I mean, in order to get into like a normal growth curve, which I'm not even sure I'm outlining with my cursor here, you'd have to drop it back down to, a level in the middle of this ellipse. That is not going to happen. The system will break before that happens. So my study view is there's really no way out. They need a reset. They need a new system. They need to resolve this debt one way or another. Treasury yields are still negative, even though we've got a 4.5% Fed funds rate, what the banks charge each other for overnight loans, or the discount window. It's still negative in terms of real inflation being well above that. The velocity of money is the key. You can print up trillions of dollars, but if it goes to the bank, and the bank sends it back to the Fed, and it sits there in the vault as a metaphor and it's gathering dust. It's as if it doesn't exist. So this is the situation with a lot of this excess money, is it's not in the system. When it is in the system and the velocity picks up, that's when you start to see inflation at your front door. And that's what's happened in the recent times, last year and a half, 2 years. So gold and silver outperformed the S&P over the Dow over the last 20 years. Certainly, they've done nothing. You could see my cursor. It was wonderful being in this business from 1999 up to 2011. I mean, there was 1 year, so 1 or 2 silver went down. Gold was higher year over year for 11 straight years. Everybody's happy. Well, the last decade, the last 11 years, it's been what I call a round trip. We've gone from the high of gold, which was all rounded up to 2000, all the way down to, I think, 1150. And then all the way back up to 1800, 2000. So if you held gold during that time, you had a hedge, but, in paper prices in US terms, you were down, and in other currencies, you were up. I won't show that graph. But nonetheless, it hasn't done much for you. We're getting ready again to launch, I believe, into a much better performance for gold. This is Franco-Nevada. It's one of the top tier. It's a royalty company. It's one of my favorites. I own it. I can't say enough good about it. And this is only from 2019 to 2020. I put this chart in to remind me to tell you this. Morgan Report subscribers know that the stocks give you leverage. So what I just showed you with gold doing a round trip for the last 11 years, if you had some of your gold investment in Franco-Nevada, it's gone from 50 to 150. So you have made 300% on your gold over that same time frame. So that'd be like gold going from 2,000 to 6,000. Obviously it isn't, but Franco-Nevada's gone from 50 to 150 round numbers. And this is where, if you pick the right stocks and you know what you're doing, you can actually have a gold position, which isn't physical, which is what you start with, but is in the sector where it can actually outperform what gold itself does. And that's what you want. If you're going to take the added risk, you want the added reward. 3 inflationary waves in 1970. Again, I think the one I just showed you a while back, going to the end of April 2011, that was silver going there. Then we come all the way down to 1850. And once we break out, now this doesn't show what I said, but it's true in most cases. This third leg is bigger in price appreciation than the second, usually about double. And the time is very condensed. So the supply of silver, the deficits forecast to accelerate. You can see here we are in 2023, just started. Pretty good deficit. 24 is less. I don't know why I didn't do this. The Silver Institute did. It could be right, but more and more and more and more and more and more silver that's needed, that's unavailable, which means you're going to have to dip into above ground supplies. As you can see, this only goes out a couple more years, but mining's been relatively flat since about 2012 or so. And it's going to remain that way, as far as I can tell, for some time. So you're not going to make it up with mining activity. Solar continues to go to the moon. And this is the high case demand. So pay attention. This 1.0 over here, the red line, is all the silver we get on an annual basis. Mining and recycle is roughly 1 billion ounces. That's not increasing for a while. So that's the ceiling. And yet, if you go in and look at the dates here, in 2022, we're basically a match. All the silver mined and recycled was equal to the demand. 2024, it's about the same. But from 2020, and this is projection, but you can see in the latter years, from like 2030 on, we're well above this curve or this line. And of course, this can change with economics and technology. Nonetheless, you go out like, let's go 10 years, 2033. Okay, we're right there. That's a pretty big delta. That's a pretty big gap. You want 1.3 billion ounces required, and you've got 1 billion to draw from. So that'd be a 300 million ounce deficit for that year alone. So as far as a legacy investment for your family, if you really had the ability to just buy silver and hold it, longer term, 5-10 years, I think it's almost a no lose situation. Gold silver ratio does matter. I trade it. I show my people how to do that. We're in this long channel. Once it breaks to the upside, we're on our way. Probably get some resistance around 30 to 33. I expect that, but once it gets above that, we could get to 50 pretty easily. Silver Dow, silver outperformed stocks last year, not by much, but it did outperform. It's outperforming real estate, and it's showing gold here, switching back to gold. If you look at all the holdings in the financial system on a basis of where it's held, you look at the mutual funds, pension funds, investment banks, global banks, sovereign wealth funds, hedge funds, private equity, and then you get to gold, it's only 1%. 1%. So if that were to double to 2%, you can imagine what the price pressure would be on gold. And it used to be somewhere between 2 to 5%, depends whose study you want to take and adhere to, but it was a lot more important. This one is from Incrementum Gold. They do great work. They're great people. And this is just a cartoon drawing of the last two bull markets, the one going to 1980, the one up to 74. And this is a conception of where we are. The point is that at $1,800 gold, we're very undervalued. If that three wave that I keep talking about is true, and you see the length of this line, and you doubled it on the scale, I don't know where that'd go, but I would suggest it's going a lot higher. And we do see these markets move fast. So last time silver and gold, but silver itself was 90% of the move came in the last 10% of the time. And it went, the total move was $48. And the time frame was, and I can't spell months, I got to fix that, 7% of the time. So we had an 87% move in 7% of the time last year. That was an 800% gain. And that's the way these metals can move and have moved in the past, is you get these big run-ups where they go parabolic. And the trick is getting out. Do we want to get out for fiat? And I don't have an answer for that. Streaming companies outperform. That's what I specialize in. You can get on board with the free list. Just go to morganreport.com, sign up, and you can also get on the premium service if you're so inclined. I am on YouTube, and I'm fairly active on Twitter. The Twitter account is @SilverGuru22. You can read that @SilverGuru22. And that's it. And I'm sorry I was late.
David, thank you so much. I know that was tough to squeeze that all in there, but I really appreciate it. That was fantastic.
Oh, my pleasure. And
All right, then.
I'll scold Lori for getting the time.
No worries. If you stick around for a minute after I bring us off the live platform, we can talk about possibly getting you rescheduled.
Okay.
All right, no worries. And to those of you who joined us today, thank you so much for coming. It is always a pleasure to have you here. Hope you enjoy the rest of the presentations today. Be sure to stay tuned as we have a lot more in store for you. I hope you all enjoy the rest of your day.